Hey folks, and welcome to the Pipnotic Symposium for the 2nd of May 2019. Today we are going to talk about a simple approach to trading. I know a lot of my material, when I go over it, I talk about parents and children, and by the way, I'm at the Green School again, and so there's noise everywhere, so I apologize for that, but try not to pay too much attention to that. But essentially, a simplified approach to trading supply and demand. Before I do anything else, I just want to say that supply and demand trading is not rocket science. You can, of course, make it super complicated and look for perfection, but that's going to do nothing good for your trading. The real answer is that there is no such thing as a perfect setup. There are no such thing as perfect market conditions. You just have to look at the chart, be mindful of what's going on fundamentally, and take trades in an environment that is filled with randomness and uncertainty. And I know that sounds a little bit difficult because as human beings we try to protect ourselves all the time. That's why we invest in insurance and things like that. We try to prevent ourselves from getting hurt in situations where things are kind of random or probabilistic or anything like that. And so trading is essentially making decisions in an environment that is constantly changing and you never really know what's going on. But the one thing that makes trading easier is that if we embrace a supply and demand trading model, you can make trades at price levels that are attractive. So you're buying low and you're selling high. Okay, so you're not buying a commodity when the price has already moved higher, which you will be doing when you look at lagging indicators. When you're looking at supply and demand, the distribution of liquidity, you'll be finding really affordable and great prices to buy and sell commodities at. Okay, so you have to keep this stuff simple, otherwise you're gonna die of stress, or if you're looking for perfection, the perfect setup, you will be taking no trades. So we have an advantage, we apply the advantage over and over again. The risk reward is in our favor, so we can lose more than we win and still make money, and you have to be okay with that. And if you're not, then maybe trading isn't really your cup of tea. But so I'm going to show a super simplified way to trade supply and demand, and I'll hand this out in the forum so you guys can and have a closer look at it if you choose to do so, and then we'll move forward from there. Okay, so the process is essentially identifying the trend, which is what's driving price. So you have to find out what price most recently has reacted to. And so if you're trading on the small time frames, I know it's really nice to be able to stay on one time frame, but the reality is that you can't see everything on the 1 hour chart or the 4 hour chart. You have to be looking higher, monthly, weekly, daily, to see what it is that is driving price. So has price reacted at daily or weekly supply or demand? And then when we know this information, which you can get instantly by looking at a weekly, monthly or daily price chart, you take it down to the smaller time frames, and then you start looking for your entries. Okay, then you have to look for an origin of a current move. Okay, so when you see a really strong move away from whatever, an area of accumulation, a distribution, well, this is an area that you want to pay attention to, okay, because this is going to essentially be the place where some big money or relatively big money has been buying or selling. Then you have to ask yourself the question, well, has price been back there before? And this is simply going back to the pancake metaphor. If a fork comes down onto atop a stack of pancakes, the first pancake is the one it's going to take upon approaching the stack previously. Once that one's gone, the fork's going to have to go deeper. Once the second one's gone, it's going to have to move a little bit deeper to the third pancake. So if you look at supply and demand, I'll draw this quickly, like stacks of pancakes. So we have a plate here. Okay, we have pancakes like this. I've used this 100 times, I think, this little metaphor. So if a fork's coming down, it's looking to grab a pancake. This, depending on the size of the fork or the force of the momentum that's driving the fork into the stack of pancakes, it'll probably move down, and if it's like a medium size fork, medium or average size momentum, it's probably going to hook into the first pancake, and this one's going to be gone. Okay, so if we go back like this, then that one will be gone. And we have the next pancake, which is this one here. So price is going to have to go, the fork is going to have to go move a little bit deeper to get the next pancake. And then when that one's gone, we're going to have to go deeper. And when that one's gone, deeper, deeper, and deeper. When there are no more pancakes on the plate, I hope you understand my metaphor of pancakes. Okay, then you're going to have to look for another plate. okay, where we have other pancakes. So when this one's gone, price is going to have to move through that to find a fresh stack of pancakes. Okay, and essentially when I say pancakes, I'm sure you totally get this, but just for the sake of completeness, I mean you have an area of supply, you mark it off like that. When price comes back to the area, it's looking for pools of liquidity. Pools of liquidity are essentially pancakes. So once it comes this far, then the pancakes at the top of this list, top of this stack, they're going to be gone. So this one's going to disappear. I'll do it the other way, start at the bottom, like this. So once that one's gone, it's going to have to go deeper to the next one, and deeper and deeper and deeper and deeper. When that one's gone, it's going to look at the next one, which is further down, okay? So this plate corresponds to that area of supply, and this one here corresponds to this one just here, okay? And I really like the pancake metaphor. I hope it's not confusing to you. So that's what we have to look for. And then we have to draw our box. We have to do our quality checklist, and we have to put in the order, then you have to walk away. Okay, so identifying the trend. If you want to look at a price chart and you want to identify a trend, here I don't even say anything about, yes I do here, sorry, long term. Go to your long term time frame. You go to the long term time frame. Let's okay, let's go to the weekly chart. Or let's go to the weekly chart. You ask yourself, what's going on? What is currently driving price? Well, look, right away you can see, cool, we have weekly demand, and price reacted to it. This is the most recent area of supply or demand that price reacted to. If price was up here and we were selling, well this, and price did this. It went up, poked in here, and then it was coming down, then we would have a short bias. But now, because the most recent move is a reaction to demand, we have a long bias. Okay, so we want to be buying. Okay, so you take this information with you down to the smaller time frames. Let me go back to the slide. Okay, I'm not even going to look at these two, we're just going to focus on this. Okay, identifying the trend, what's going on in the trend. Well, we can see that we're moving higher because we're reacting at weekly demand, which is very substantial, and this is a very attractive area of demand, so there's a lot of buying there. Price couldn't get down there, it got down there once, and it shot up really nicely. And notice that price went a little bit deeper, this is gray. And then price kind of poked deeper, and then it went higher. So we're anticipating that price is going to move higher. So we have a long bias for the euro, Kiwi dollar. Good. Okay, so let's go back here, and then we have a look here and find the origin of a strong move. Looking at this, where do we see a strong move? Well, right now we're seeing a pretty strong move, aren't we? You can see that if I zoom in, we have a strong move here, left there. We're in the process of forming a strong one now. So we have that going on. See, so if price manages to close above this high, then I'll think, wow, that's pretty cool. This is a pretty strong push away. Okay, so we have two strong pushes. We have this one, we have this one, which is not yet confirmed. We want to see a nice strong bodied candle for that to be considered a strong move. Because this is where you start your analysis. Has price been there before? No, it has not. See, price has not been here since the strong release. Has price been here since the strong release? No, it hasn't. So price could easily kind of come up and then dip down into here and react, or come deeper and react into this. Okay, so we have that. Oops, one of the damn dogs on the campus here. Hopefully no children were bitten there. Good. Okay, so you move, you look down and left for demand, and up and left for supply, and then you keep moving a rectangle until you find a fresh area. And as I showed earlier, we have a fresh area here, and we have one that's being formed right here. Okay, and this is not confirmed. We need to see price to show us some strength. So ideally, if price were to move above here and maybe move into pretty deep into this one, then that would make me pretty happy about considering this one for a trade. Okay, we have this really nice area of supply, by the way, in line with the interest rate differentials, because this would be a really nice short up here at the let's just mark that off at the 17400-ish area. Looks very nice. Okay, so now we move on to the next step. And this is what we're looking for. Looking for price to move down, accumulate, and then leave. We want to see like a lot of pushes away. Ideally, you want to see price move down into an area, start consuming liquidity, distributing orders to move price higher. Then you want price to move higher, and then relatively quickly thereafter poke back into the area of demand and move away. And we have the same thing happening here, just upside down, where we have price rallying to an area of a bearish liquidity accumulating. So we're filling orders to do what? To move price lower. We move away, and so now we're looking for a reaction here at this level of supply in order for price to move lower. Okay, you don't want to see a whole lot of accumulation, so like 1 to 5 periods. If you see stuff like if you see stuff like this, I mean, I don't really like this that much. You see how, I mean, price gapped up. The fact that it gapped up tells us this is a good area, but if price wouldn't have gapped up and would have kind of just started drifting higher from here, it doesn't look very good. Also here we have price moves up and it kind of moves around. We have a lot of accumulation distribution there, and price is not really going anywhere. As a result, price cuts through it very easily because there are no sellers at that area. So you want to see a relatively short period. How many? 1 to 5 periods of accumulation at supply or demand. Then you draw your rectangle. So you have current price. This is spot price. Then you have your rectangle and you attach it to the lower edge and the higher edge of the area of supply or demand. So for the demand, you simply want to attach it to the highest body for the area of demand, and the lowest body for supply, and it has to go all the way down to the lowest low in that area of accumulation for demand, and the highest high in the area of supply. Okay, just like that. And you have your quality checklist. This is simplified. So how did price leave the area of accumulation when it was formed? Let's just have a look at that. So if we look at this, I mean, how did price leave this? I mean, it left pretty forcefully, didn't it? You can see there's very small wicks in this candle. We had a very high volume push higher. Price closed. This shows strength. This is very strong. This is very strong. So we had 3 weeks, 1, 2, 3 of price selling. I mean, that shows some serious strength from this area here, which is why this is such an attractive level up here. Okay, so this is good. So price left very forcefully. We wanted to see it leave forcefully. How far did price go? Price went pretty far. It doesn't have to go that far, but it just has to push away. Because if price, let's say that we can see nothing. Let's see that this candle has just closed. Okay, so we don't see any of this. Price just opens. So we want to see price come back to this level within 1 or 5 periods. And why within 1 or 5 periods? Well, that is because if more time passes until price comes back to an area, the sentiment could have changed, the fundamentals could have changed, which would maybe invalidate this area of supply. Okay, so if price, let's find a really good one. That's probably going to be one on a smaller time frame. So if we have, what do we have? So if we have, okay, this one here, just for the sake of example, this isn't a good one, but it illustrates the situation where we have a rally, accumulation, a really strong push higher, price comes back within 1 time frame, goes a bit deep on the second, on the third, it finds those buyers, and then poof, and then price pops higher. If it does this, at the point that this area of accumulation was established, the sentiment has very likely not changed much at the time price revisits the area of demand. And so we still have a valid a reason to buy at this level. Okay, so it was formed, very shortly thereafter comes back, and this is when we depart from. Okay, so that's what you want to see there. How long did price accumulate? So we want it to accumulate for a short period of time. Here we had 1 period, rally, accumulation, rally. That's nice. Has price been back since it was established? If we focus on this candle, no, it has not. So which makes this a valid area to buy. And how far has price had to travel to reach the accumulation? Well, it didn't have to travel that far. It just had to retrace the length of the price imbalance candle, which it did, and then it left quickly. Okay, so this is looking like a pretty decent area. In relation to this point here, this is more in reference to stuff like this. So if price establishes an area of supply or demand, it leaves we move, and if you get some blue candles that look like this that poke up into this area here, there's a good likelihood that price is going to rebalance, especially if the range information has been succeeded for whatever time frame it is that you're looking at. So if you have at least 1 times the daily average range, so price the daily bar moves into an area of supply, and it's the end of the trading day, then price will very likely kind of weaken and pull away because there's going to be less buying pressure. Okay, so that's quite an interesting point. Okay, so let's move on. Put in the order. The entry is at the proximal level. So for this one here, the entry would be at this area here, plus or minus. I normally leave it on the area because price almost always comes at least into the high area here, plus or minus 1 pip. So I normally put it right on the money, and the stop goes at the edge of this box. What I'm normally doing is I'm moving the box, so it's like a little bit lower, like that. You see how it's not entirely lined up with this. There's a little gap there, and so I just put it right on that edge of the box. Stop entry. Stop is at the distal. The target is opposing supply demand. If we look at this, I mean, let's say that we're gonna get in here. Where would your target go? Well, we're probably gonna see some trouble at the edge of the sell zone here. So below these highs, I think we're probably going to start to see some selling pressure up here. And so you want to essentially be out of the trade by here. Maybe get some of it out, get out your risk, and then go for the opposing. Come on, go for the opposing. Go to the opposing supply, which is up here. Okay, just here. Good. And that's it. Okay, super simple. So we'll go through it one more time. Okay, we'll go up here. Okay, identify the trend, so what is currently driving price. Find the origin of the current move or a strong move. So where did price leave with strength? Has price been back there? Yes or no? This is pretty simple. Draw the box, go through the checklist, put in your order, and walk away. Okay, and so, I mean, people have been asking, okay, have this, I won't do this this homework here because I'm just going to let you guys do this individually. So we're going to go down to smaller time frame. And go to the, let's see, 1 hour chart. We're going to have a look at these different areas. And so I want you to go to, let's say, the daily chart. Okay, you should be on at least the daily chart when trying to assess the trend. And you ask yourself, what area, or sorry, what's currently driving price? What's currently driving price on this? Where, if you look at bleeding edge price and you trace it either lower or higher, has it reacted on anything? And you can see here, yes, it reacted on 4-hour demand. You see this nice little pattern? We have the parent, we have the child, price reacted to the child, and that's where it left from. And so what do we have? We have a bullish bias. If you're using the strength software, you see we have the gray histogram, which is above price. On my version, I have these 2 lines as well. Here we have the blue, which is the base currency, and the black, which is the cross currency, and the histogram, which is the difference of these 2. But in your version, you won't have these colored lines. I'm just toying with modification in an upcoming version. Okay, and so you can see that, wow, okay, we should be buying. So look at the origin of a strong move. We'll go back to our checklist. Sorry to race around. Find the origin of the current move or a strong move. Where can we see that here? You see it right here. Here's that candle. Okay, so if we go back here, has price been there before? No, it hasn't. This candle has just closed. Okay, so going back here, draw the box, draw or adjust your supply demand box. If we draw that, let's just draw it like this. Okay, like so. And now we go down to a time frame which is a 1 or 2 less than the current. And you can see very clearly that we actually have that candle, which is pretty clear here. That really strong move. Has price been back here since then? No, it hasn't. It has not been back there. You can see this white space or my old chart's black space. I changed my chart colors from black to white just to kind of mix it up a little bit. Okay, and so if you look at this, you can say, well, I can actually adjust my area of, in this case, demand, because since price less, you can see it came back to this area here. So this is the demand. Price rallied. We accumulated for 1, 2, 3, 4. Is this less than 5? Yes. Price left. Where did it have to retrace to in order to find buyers? They had to retrace to this area here. Okay, so this would be a logical area to look to buy. Okay, so go on your demo account, put this on, and watch what happens when price reacts at this level. Okay. You go to small time frames and you can refine it even more if you like. You can see here price kind of went up, accumulated. We had one big pullback, maybe hitting some stops, trying to find liquidity to push price higher. And this is where price left from. So we can go like that. Okay, so price went up, it kind of held just above the level, and then it popped up. So you want to be buying at a price no more expensive than the lows of the most of the deepest retracement since the establishment of this area of demand. Okay, which is where? Which is, well, the beginning of the buy zone is here. Okay, so you have the beginning of the buy zones there, and so that's what you want to be looking at to buy it from here and above. What I don't like about this, and this goes back to the whole quality checklist, when price left, I mean, we kind of sat around there for quite some time, didn't we? You see how kind of price moves sideways here. Does that mean that this won't work? No, it doesn't. But it means that, I mean, it was less interesting here, which is why I moved my entry down here. Price will potentially easily move back down to this area and have a bounce. But I found this area to be a little bit more interesting because this is where we had the sell-off, accumulation, and then a buy, kind of a nice push away. And price has not been back to this area since for this entire move. And so for me, the area of the buy zone would be like this. So if we look on the 4-hour chart, and this is a 4-hour entry, you can see it looks like that. Okay, just like that. I'm looking to do something down there. This is not beautiful, but I think that if I'm in front of my computer, I'll be looking to manage this trade a little bit carefully. Okay, so this is what you want to be doing. It's pretty simple, I think, when you put it in those terms. So you draw the box, you go through the quality checklist, simplified, and you put in your order, and that's pretty much it. And so what I'd like you guys to do is to, if you're up for it, is to go to a time frame. Let's say go to the daily chart on maybe 5 pairs, and I want you to mark off areas. So I want you to identify the trend. And you can do it many ways. I mean, I use trend lines sometimes, but in most cases I'm going to look at the higher time frames, and I'm going to look at, let's go to the monthly. What's going on here? So we have a really big candle moving higher. We have a candle here, monthly candle, with almost no wick below, that's moving higher. And so within this bullish candle, there's no wick down here, and this, well, candle is still kind of making up its mind. There's going to be upward sloping trend lines. So I don't do the trend lines so much unless it's unclear. But within this and this, we're going to be seeing this on the smaller time frame. So we're going to have trend lines that are going higher. Okay, and just to prove that, let's have a look. Let's go to the weekly or the daily, and you can see we have the trend lines here. You know, we have low, we have the high like that. The price is going higher, so you can see that, yeah, we have our upward sloping trend line. Okay, and so I'm just going to the higher time frames to take that step out of it, so I don't have to manually draw this on my charts. Go to the monthly or the weekly. Okay, what's price doing? It's moving higher. We had a really strong push here. Ideally, you want to see something like this. Okay, and then you know that there's a really good chance that next week could be looking like that as well. Okay, and so this looks good, and so I'm going to be looking to buy at an area somewhere in here. If we go to another chart, let's go here. What do we have here? Well, here we have a lot of indecision. What does that mean? That means don't trade this pair. Just wait for it to do something. You go on the smaller time frames, just like moving all over the place. From the smaller time frames, notice here on the monthly, we're not really doing anything. We're kind of approaching what demand down here, but we haven't quite gotten there. On this time frame, you can see that, or the 4 hour rather, you have some really nice supply here. Okay, and so it still means that you can take these trades. It just means that price is not going to go as far as you would like it to. So go to, let's say, the weekly chart, go like that, say what's price doing. It's kind of messing around, isn't it? Okay, so go to the next pair. The Aussie, what's going on here? Well, we had a really strong push lower. Now price came down and it's moving higher. See, I bought down in here, and so I'm expecting price to move higher from here. Why? This is just a test. So I saw this. We had like this area of demand here. My stop was like, my stop used to be like this, and I saw this and I said, cool. I mean, I'm gonna leave that on, and now I'm expecting price to move higher from here. Why? Well, because we're reacting at this area of demand. Price came back to it once. We had a decent reaction. So this is the second time. So I waited for price to move through it. I expected it would, but I didn't know where it was going to stop. Then I waited for the accumulation candle to form at the area of demand, so I could put a rectangle on it. And I did this. Boom. Oops. Like that. Okay. So my stop was here. My entry was there, price came in, and last night it got taken into this. Okay, so I'm expecting price to move away from that. And if you like the strength information, that's pretty interesting. And you can use that especially for divergence and stuff like that. It's a pretty useful tool like that. Will price stop? I don't know. As a matter of fact, as far as I remember, I had my stop a break even, so this might be a break even trade. I don't like how price didn't leave that quickly, so I'll maybe put it like that. The only candle that looks any good is this one here, and so I'll keep my my stop below here, because we do actually have this. We have this here, so a little bit of a push away, as you can see, 1 hour. So we had price left, we accumulated, we pulled back, and we cut away. So we had higher this candle, higher this candle, higher this candle. We had 1, 2, 3, 4, 5 periods of accumulation. Okay, and then price cut out. So here we have a new area of demand, which is here, which includes 1, 2, 3, 4, 5 accumulation candles. So ideally, you want price to go a little bit deeper, but it didn't. And so, what does that mean? That's kind of like maybe a little bit of a warning to be careful. But I'm still going to take the trade. And the currency trading histogram is really cool, because you can see what price is doing when it reaches a level. And so yeah, we'll wait and see what happens here. Good. Well, it's pretty straightforward. Yeah, the main thing is that you keep it simple. Don't overcomplicate it. Don't turn it into some kind of a science, because it's not. It's just a matter of looking for these patterns, drawing your rectangles, getting the trade on, and then reducing risk. We're risk managers. You get into a trade, the point that your trade is filled, it becomes about managing risk. Okay, and so then you have to start looking for places and reasons to get out of the trade. Okay, and you can see here we had, and this is the target. Will it get up there? I have no idea. I have no idea if it'll get there. It won't initially. Price will probably come up and maybe challenge the lows down here, or who knows, and then maybe have a little push higher. Okay, so keep that in mind. We have a look at maybe the Aussie yen, see what's going on. So let's go to daily chart. What's going on? We're approaching these lows here. You can see we have some like support here, around here. So we have the demand here. Nothing great at all. I'm going to move this line. Price is getting close to it. Above that, we have this area of supply. So price reacted to what? We don't know yet, so we'll mark off the high here. We can zoom out. We can see what price is doing. Well, price reacted at this area of 4 hour supply. This is where it reacted at, and it's moving down. But you can see it's really moved far. It's come all the way to the other side of this channel. So we're trading between this area of supply and this area of demand. So should we sell now? Maybe not a good idea, because we're getting a little bit too close. Okay, but what we do have is this is like the 200-day moving average, and it overlaps nicely with this. I've never used any moving averages before, but a friend of mine told me to look at the 200 period moving average, so I've been doing it just for fun. And I don't take trades on it alone, but I do just keep an eye on it and just notice where it is in relation to price. Good, so price is coming down here. Has this area been tested before? Yes, it really has, quite a lot. See, the momentum is to the downside, and you can see on the currency strength histogram, you can see that we're painting gray bars below the zero line, which means it will potentially move lower from here. Okay, so that's maybe where we're gonna go. Maybe move back into this this demand here before we move higher. Cool. Well, I won't make this any longer than necessary, but I hope this information is useful. If you have any questions, just send them over to us via the form or via email, and we'll have a look at those. Actually, I prefer that you send your questions into the chat form, because it's really good at creating a bit of a discussion. Good. Well, listen, thanks for watching, and I will see you in the next video.